Hi, and welcome to the Stock Scores Market Minutes for May 30th, 2016. Let's talk about the cycles that occur in trading. The volume and quality of trading opportunities are not consistent over time. There are times when you get a period of great opportunity with great follow-through, consistent profitability. And then there's times when the market is just quiet. A lot of strategies may not work well. You just don't get the follow-through. Good trades come in cycles. What is important, however, is to realize that you have to maintain your focus, because out of those calm, dead periods in the market comes the best trading opportunity. And the tendency is for people to get frustrated, take their eyes off of the market, and then miss those good cycles, or at least join them too late. So when things are calm, things are quiet, maybe not working all that well, that's when you want to watch closely, because it is out of that you get the best trading cycles. All right, let's look at this week's market analysis. Whoops. Here is the chart of the S&P 500. This is the 30-day, 60-minute chart. You can see that the market broke the downward trend line right there. That is a bullish signal. We had a little rising bottom there, and that is what has led the market to move higher. That was Monday. Now, the basic resistance going back on the weekly chart is just a little below 210. We actually closed above that this week. So we have a bit of a bullish signal, and I'll show that on the next slide in just a moment. In the short term, we've had pretty good strength, and we're going to run into that resistance there. So expect in the short term for that to stall. However, on the weekly chart, you can see that that downward trend line, which we have talked about really for months, has now just barely been broken, and that is a bullish sign. The problem is volume. Look at the lack of volume there. So although we have a bullish signal, we still have to be cautious because there wasn't a whole lot of people voting in the market. That lack of volume is the proof. Moving over to the Russell 2000, even a more clear-cut signal of the break of trend from a rising bottom. That is a positive, but again, not a lot of people voting in the market. The volume was low. So it's a good signal on price. What we need now is some confirmation from volume. Canadian market also moving up this week. I think there's been something of a rotation in the Canadian market. The mining sector was not doing all that well last week because of the weakness in gold. However, that money is moving into other sectors of the market, most notably the financials, which benefit from the prospect of interest rates moving higher. And that was really the discussion in the market last week. On the longer term chart, we've just started to get through that resistance right there. That's a positive. We got upward momentum, but again, volume weak, so we shouldn't get too excited about the signal. I think next week will be important to see how things react after the US long weekend. The TSX Venture market finally showed a little bit of weakness. Not much of a surprise as we come into that resistance from 2015. And again, the weakness driven by the fact that there was a pullback in the mining sector as gold prices moved lower. I think this market is a little overbought, due for a pullback, and so I want you to be cautious with the mining names in particular on the TSX Venture. Treasuries kind of stuck in that trading range. We've talked about that for a while. It's a good chart because we have rising bottoms, and that points to interest rates going up. But until we break out of this range or break down from this range, it's difficult to call the direction. It is slightly optimistic to the upside. On the US dollar, we've broken that little downward trend, some strength the last few weeks. That has contributed to the weakness in gold, driven by the talk or the speculation that there will be a interest rate hike in the United States either in June or July. Jury's still out on that, but certainly the market beginning to price that in, and that is evidenced by the strength in the US dollar. We are really stuck inside of a range still. I wouldn't say it's a particularly predictable chart. It's just kind of, in this bit of a falling wedge pattern, not a lot of direction in that chart, not like we had way back here when the market really was moving. On the gold chart, there you see the weakness we talked about. If you think back 4 or 5 weeks ago, I highlighted this as a very bullish pattern because it was breaking from a rising bottom after the downward trend line had been broken. Well, the action this week almost entirely negates that. Until I get a close below 115, I'll still be a little bit optimistic, but really this is a pretty negative chart for the gold bugs out there, and I want you to be cautious. If you're long gold stocks, be cautious because of this. If it doesn't bounce back next week, you might want to consider exiting some of those gold positions. On the oil chart, again, I've said it for a few weeks, we are trickling higher. It's not moving that higher or higher that much quicker than, certainly the intensity to the downside was sharp back there. The intensity to the upside is lacking. It's sort of drifting higher. Not really a bullish chart, but still, at least it's moving up. And so you have to remain somewhat optimistic in the energy sector. The fear factor, the VIX, which is the fear index, moved to new lows this week. Fear is not a factor in the market, but that also means investors are complacent. So if we do get a rollover of the market, when we have some real volume in the market, then we got to be a little bit concerned, because this complacency means we can get a sharp bump higher. For now, nothing to worry about, but watch it closely if you do see an uptick in the VIX. So my ratings then, bullish long term on the US stock market. I put my rating as neutral short term just because the market kind of went straight up in the last week. And so it's due for a little bit of profit taking. And again, the volume was light, so I think that's quite likely. Canadian stocks, bullish on both time frames, but not enthusiastically so. As I said, with oil, it's kind of trickling up. It's good that it's going up, but still not a lot of excitement there. I've lowered my rating to bearish on both time frames for gold, but it does have a little glimmer of hope still. It could bounce back next week and hold some support. And bullish on oil, but not extremely bullish because of that lack of enthusiasm. U.S. stocks have broken the downward trend line this week, but volume has been light. We may see short-term profit taking, but this is an important bullish break that we saw last week. Canadian stocks continue to show strength. Gold has nearly negated the positive break to the upside, while oil continues to trickle up. And as I said, fear is not a factor. That has been the Stock Scores Market Minutes for May 30th, 2016. Have a great week in the market and trade well.